Hey everybody, this is John here for a StockSense update. This video I want to bring to your attention the importance of the 5-day moving average. The chart you see before you is a chart of the SPY. The SPY is a fund that mimics the performance of the S&P 500. This fund you can physically purchase and sell in your stock accounts, which is why I like to use it to give me a good perspective on what the broad market is doing at the moment. And what you see, this black line indicates the 5-day moving average. And I want to point out to you the importance of this 5-day moving average. About 2 weeks ago, starting around the 11th, we had popped up and we had hit a resistance line on the SPY at about 115. And during the consequential week, we had kind of just had seen some sideways action. We had come up and we had tested this line a couple times, and it's interesting to note what the 5-day moving average was doing during this time period. As price was testing this resistance line, you can see we tested it 3 times here, but we weren't able to break through. Price was fluctuating up and down below the 5-day moving average. That is important. That type of action, when you see the action of price moving up and down between a 5-day moving average, and this can be on an index, this can be on futures, this can be on individual stocks, you want to note that. That type of action indicates indecision. That means that the overall market is not really sure. It doesn't really have enough strength to turn either way, and it's a good indication of a turning point. Now, it doesn't always happen, but it's a very good indication of a turning point, and it's something you want to keep in your mind when you see this occur. And one thing I want to point out to you is, as we had come up to the top, you saw the 5-day moving average having a rising slope. As we started to test that resistance and we were kind of in a range, we were range bound during this week, we saw the 5-day moving average start to even out. The slope of the 5-day moving average started to become flat. And then over here on the 21st, we were attempting to break up through the 5-day moving again, as we had these last couple times, but we weren't able to, and that 5-day moving average basically acted as resistance, and the market sold off heavily from there. And this is a common progression to look out for. You see the 5-day moving average sloping up, the market's rising. Then you see the 5-day moving average start to turn sideways. It's going to take a couple of days for that action to happen. Then that gives the opportunity for the 5-day moving average to start sloping downwards. And when we start getting that slope downwards is when we have the potential of a sell-off. And sure enough, after the market tested as resistance, we sold off. Now, it's important to see the action right here. As we had kind of started finding some support down in this area, we saw that the market tried to rally up, tried to make another push here, but it wasn't able to, and lo and behold, it was stopped by that 5-day moving average. Price went right up to that 5-day moving average and pulled back from it. 5-day moving average again acted as resistance, and still here, the 5-day moving average is still sloping downwards. That's something you want to keep in mind. Now, yesterday was a pretty volatile day, and again, we tried to test it, and the test occurred today. We started rallying this morning. We still weren't able to push through that 5-day moving average. That 5-day moving average still acted as resistance, and we are continuing to pull back here. This morning I woke up, turned on CNBC, everyone was all happy, everybody thought that the market was going to continue to increase, as we just gotten new GDP data saying that we had our second straight quarter of GDP growth, indicating that the recession is over. But that really doesn't matter, because the market didn't really care about that, and we can clearly see that it hadn't broken through that 5-day moving average, and it sold off. And until this 5-day moving average really has time to start to even out, the slope will even out, and then maybe start going higher, that's when we want to be aware of the possibility that we're going to start to continue up. But for right now, don't listen to this hype about, oh, we're going to get a good bounce from this level. We're still below the 5-day moving average. And until I see price break that 5-day moving average and that 5-day moving average start to turn higher, I'm not going to trust the long side. I'm not going to trust buying stocks to hold with the possibility of them increasing. Right now, the sellers are still in control. And until we see this 5-day moving average even out and turn higher, it's just a good idea to stay on the sidelines or short some stocks. It looks like we could be finding some support. Oh, mistake there. Looks like we could be finding some support down in here. And maybe this might be the higher low that allows this market to continue up. And you might even be able to see a little bit of a inverse head and shoulders here. But that has not come to fruition yet, so we're going to wait to see what happens with that. But it's just important to note the action of this 5-day moving average. It's amazing how the market will follow this, and it's a great tool to figure out who's in control. You really want to trade with the direction of the 5-day moving average. And hopefully this gave you guys a good little lesson here on what to look for. And if you have any questions on how to get your 5-day moving average, how to get it up on your charting system, I can help you with that. Just email me at jwtrader86@gmail.com. And yeah, this hopefully is going to, again, be the first of many lessons that I'll bring to you. Right now, like I said, just be cautious of the long side, and good luck trading for the next couple days.